Hi there, and welcome to our latest edition of Money Talks, where we take a look at all aspects of the rural economy as it affects you in the ag sector. In this edition, it's payout time for Fonterra's dairy farmers. What's the smartest way to go with all that money? How will the Antarctic Southland snowstorms affect our vital agro-production? And big game plan changes by the Reserve Bank. What's it going to mean for future interest rates for farmers? All this and much, much more coming up. But first, good news for dairy cockies. After 2 months of falling dairy commodity prices worldwide, things are looking up. Fonterra's latest global dairy trade auction prices increased about 2% on the previous event. Joining us to tell us more is ASB rural economist James Shortall. James, great to have you back.
Always good to be here.
Terrific auction result. What's going on?
Yeah, I think prices have been stable over the past couple of weeks. They saw that big surge in the early part of September, which increased for whole milk powder up around 25%. So the fact that prices have increased slightly again is good news, and good news for dairy farmers. Now,
the anhydrous milk fat was up 10%. Is it just all about supplies at the moment?
I think it's supply and demand. Supplies have been back for the fat sort of based products globally, and there's been big demand for anhydrous and sort of butters and that sort of thing globally through 2010, and this is probably another aspect of that occurring.
And skim milk powder was up too.
Yeah, skim milk powder, whole milk powder, they were both up. There's not a lot of change in those particular dairy commodities. The fact that they are stable, then if they can stay this way for over the next few months, and that's going to be good news for this coming season's dairy payout.
What's the outlook going forward into the world situation? What are you picking at this point in time, James?
Yeah, it's sort of things are in balance at the moment. It seems like we weren't predicting that prices would have increased as much as they have this early on in the season. Prices sort of fell for several months through the middle of 2010, and we were actually picking that they would pick up sort of October, November. But the fact that they've picked up now, it's good news. It's good for payout in the coming year. Supplies globally have been increasing. It does seem like European supplies have been up through this season. US supplies have also been increasing. The outlook for supply here in New Zealand seems like production is going pretty well, and that also in Australia. So that does have a bearing. So it's interesting to note that prices have increased. I guess we're still seeing very good demand out of the emerging economies, especially China.
And they're predicting that over in Australia, the dairy industry there is going to have the best time it's had in what, a decade?
Well, perhaps. I mean, they've had some pretty good rains, and it's also having an effect on their beef industry and their lamb industry. They've grown more grass than they typically do, and that does indicate that production has been a bit higher over this past year, and going into this next season, production could be higher also.
And a lot of activity apparently coming out of Russia and China.
Yeah, well, I mean, of course, there's with the grain markets and food imbalances, I guess, in Russia, then some of these emerging economies are really driving demand. China, of course, being our largest dairy market and our largest market for a lot of other agricultural commodities. Now, I think that's going to be a real focus going down the track, and other economies in the Asian area are going to be a big driver for dairy.
Apparently in China, yeah, James, I saw that milk powder imports were up 70% in 3 months to July. I mean, that's phenomenal.
Yeah, well, when you look at Chinese imports of dairy products from New Zealand over the past sort of 8-9 years, then it's just a phenomenal story for their growth. I think the free trade agreement has had some benefits for the dairy industry in particular. But of course, the Chinese dairy industry is growing also, but demand is outstripping supply at the moment, and of course they need a good product, and New Zealand has a good product, and it's going to be great news for us.
And what's the word now for the beef farmers? What's going on there? How is the US doing, for example?
Yeah, the US market has actually fallen over a little bit over the past week. Unfortunately, supplies, there was a report out from the US Department of Agriculture last week, and the expectations were that the cattle on feed numbers would be lower. They were actually much higher than expectations, so that was bearish for US prices. It does suggest that supplies may not be quite as tight leading into the winter, and US prices have fallen back a bit. Here in New Zealand, then, scheduled prices are actually still high compared to last year. We're picking that here in New Zealand, then scheduled prices will be at or a bit higher than what we have seen over the past season.
Okay, let's talk money and currency. How are we doing against the greenback? What's going on?
Well, it depends on how you look at it. We've been increasing against the US dollar. As we sort of speak, we're sort of sitting in the 73.50 range against the US. We were actually getting up around 74 cents last week, at the end of last week, but after the Reserve Bank of New Zealand came out with their sort of statement, then we tracked back. Of course, they did sort of mention a few things about that the New Zealand dollar is overvalued relative to our economic fundamentals. So the currency's been really strong against the US dollar. We've also been strong against the euro and against the pound. The Japanese came out last week and started buying the yen, and that did see the euro strengthen. So we've traded back a little bit, sort of around that 55 against the euro and around 47 against the pound.
And of course, some changes across the ditch when it comes to the dollar. How's that going to affect us here? Yeah,
we've been sort of been pushed up a bit because of what's happening in Australia earlier on this week and part of last week. Then the Reserve Bank of Australia, their governor came out and said that unless we start to see some of these negatives come through in the global economy and really affect the Australians, then there's the potential that Australia might go through a really robust period of growth. So that was seen to be pretty positive for the Australian economy, positive for their interest rate environment, and of course that does bump up their currency, and we've sort of been dragged along with it a little bit. But it does also mean that of course we're much lower against the Australian dollar. So for those exporting to Australia, then that's probably pretty good news.
A bit of good news.
That's right.
Thanks, James. Coming up after the break, a new Heartland Bank for Canterbury farmers, and who's clinching the deal with troubled NZ Farming Systems Uruguay. But first, a question for you in our Farmers Facts and Figures quiz. What percentage of U.S. workers expect to be working after the age of 65? The answer right after the break. Stay with us. Welcome back to Money Talks. Just before the break, we asked you, what percentage of U.S. workers expect to be on the job after the age of 65? The answer, 33% of American workers say they'll be working once they hit 65. Joining us now is Senior Financial Advisor for Spicer's, Jeff Matthews, just back from a swing through the United States. Jeff, 15 years ago, about 14% of Americans figured they'd be working past the age of 65. Now we're up to 33. What's going on?
And rising. Basically, the poor economy and the current recession in the US is the worst since the Depression. There's been something like 8.5 million jobs lost. And you've also had a 10-year period. If you're a US investor and you've had money in the share market and possibly even in the property market, you've actually made no money in 10 years. So the idea that you're putting money away in your retirement fund every week, every month, you just haven't seen the growth that you would have expected. And so suddenly people are coming up to the kind of collect window and they don't have enough money to retire on. And so you've got poor economy, unemployment, and the realisation that you perhaps need a lot more money than you thought you did to actually enjoy a reasonable lifestyle.
Jeff, you're just back from the United States yourself. What's the mood of the American people there from what you could pick up?
I mean, the US is always pretty positive. I mean, because we're Americans, we can do, anything's possible. But there is a little bit of doubt. I mean, there are concerns because of government debt and national debt kind of continuing to build. And you've got this political impasse at the moment between Democrats and Republicans. And that's the real concern, that the tough decisions actually don't get made because of politics. The vast majority of people, I mean, you can focus on the 10% who are unemployed, but the other 90% who are actually out working. They're still going to restaurants, they're still going to the mall. You don't notice a lot of difference. It's just, I mean, from a New Zealand point of view, it's a great place to go for shopping because at 73 cents, it looks really, very cheap compared with here.
Now, Mr. Bernanke, James, over in the States, is trying to decide whether or not to throw more money into the economy, more stimulus. They're holding off printing the money. How long do you think that's going to go on for?
Yeah, overnight he actually came out with some comments and suggested that they're going to continue supporting the US economy, but they were a little bit blasé about how they were going to do that and when they were going to do that. I think, at some point down the track, perhaps in the next 3 to 6 months, then we may see some measures coming back into play. They don't really want to extend their balance sheet any further than what it is, so it depends on the profile as to when that may happen. But I guess markets have taken into consideration that they are going to be there to help if things deteriorate further than the Fed have committed. committed to the US economy, which is good.
Frightening to see, though, that since 2007, 2.3 million Americans have lost their homes. They've been repossessed by banks. Is there any end in sight to this?
No. The latest figures I saw last week out of the property market is that 23% of homes that have a mortgage don't have any equity in the home. So, I mean, to put that in the numbers terms, that's 11 million homes have no equity. So if you look at a most extreme example like Las Vegas or Nevada, you've got a situation where 70% of all the homes in the state have no equity.
Incredible.
So the mortgage debt on these properties is worth 120% of the value of the property. And it's going to, I mean, I know the government's tried stimulus packages, they've tried first home buyer incentives, and that gave it a little bit of a lift, but really the market needs to find its own natural momentum. It needs to hit rock bottom before it can start building. And so, you know, there's about 8 million homes in the foreclosure process at the moment. So, I mean, these are big numbers.
Okay, let's talk farming. Apparently, U.S. farmers, ranchers aren't happy with the meat industry. What's going on there,
Well, they certainly
Jeff?
weren't in Colorado. When I was in Colorado, there was a conference at Colorado State University, about 2,500 ranchers from across the Midwest. They're very unhappy with the beef industry. You've got a situation where it's not very profitable for small producers, family farms, and you've got an ageing population of ranchers, and they just, you know, with increased kind of health regulations and packaging requirements, it tends to favour the big commercial producers who, it's a bit like the supermarket chain in New Zealand. You've got two suppliers. If you grow fruit and vegetable, who are you going to sell to? And they basically got you by the short and curlies, if I can put it that way.
You can put it that way if you want, yeah. James, I was interested to hear that Jeff was telling me that farmers in Colorado are tending now more towards grass-fed beef. What would be behind their thinking?
I think there's been so much volatility in feed input prices over the past couple of years that grass-fed, as we know here in New Zealand, and that's a good way to minimise your cost, to control your costs, so you can control them on your farm. So, yeah, I think that's probably been a big drive. There might be a bit of consumer drive towards that, but, you know, really to control costs. And as we've seen over the past couple of months in grains, corn in the US, which are major inputs for the dairy and for the beef industry, then they are increasing, they're fluctuating, and they're really just squeezing margins. So they're trying to minimise their volatility and their risks, I guess.
And over in Iowa, Jeff, you're telling me that there's big problems with the egg producers.
Yeah, I mean, again, you've got this commercialisation of farming, so you've tended to end up with 3 or 4 major egg producers in the US who kind of dominate the market. And again, you're always trying to drive profitability, and what they're saying is that these big egg producers in Iowa, two specific farms, have cut corners. You've got, you know, cheap Mexican labour,